get rolling.
Okay. Yep.
Okay. Okay, we're back. Going to the home stretch. And these are really good ideas, okay? Saving the best for the home stretch. So we're talking about a company that's got very good tech exposure. And when you think tech, you go value? No, you're kidding. But yes, in this case of this company, we're looking at, in my view, one of the strongest valuations out there, the lowest valuations out there. Company, Phototronics, kind of recent initiation for us. Maybe it's 6 months. They design, manufacture a high precision photomask essential for semiconductor and flat panel display production. Their products, it's very key here, enable the miniaturization of microchips and enhanced display resolution, supporting innovation in AI, IoT, automotive, and consumer electronics. We launched coverage recently and have a $32, $33 12-month price target on Phototronics, symbol PLAB, and currently trading in the low 20s. So, and we have Ted Morrow, VP of IR with the firm. And he's going to be starting here pretty soon.
Should I take the microphone or just stand there?
Probably there. You can use the clickers too.
Use this one.
I think we're good. Yeah.
Let me see.
All your set.
Okay.
Hold on, isn't that it? Okay, it is. It's just like a little delay though.
Advance it manually or on the computer, laptop.
I'll just check it. Hey, this will be you.
Okay.
You want the mic for this?
This one's Mike.
Mic's fine.
Okay.
This one's fine. Okay. Thanks, Robert. Really appreciate it. Yeah, so we make, it's called a photomask for the semiconductor market and for the flat panel display market. I'll get into the products and the technology in a second, but you can see on the bottom left-hand side, you have an individual holding up a sample or an image of a photomask. It's in the semiconductor world, it's a 6 inches by 6 inches. It's a piece of glass, and it basically has on the glass what the schematics or of a semiconductor chip design are. So, and then that's for the semiconductor market. For the flat panel display market, the photomask size is, say, 3 meters wide by 2 meters tall, and in our clean room facilities there, it's too heavy for humans to lift that piece of glass, and so it's a very automated process. But kind of get into, obviously we got the safe harbor, but actually this doesn't, we're going to do this way, the old-fashioned way. There we go. All right, so just a little bit of, just a quick overview. Numbers there are trailing 12 months. Generate a lot of very strong cash flow out of the company. Headquartered in the United States in Connecticut, right up the street. And then we have, on the bottom left corner, you see revenue by geographic location. And that's really, out of the facility's origin. So, for example, we have 2 facilities in China, so 26% of our revenue originates out of China. And within that, all of our production in China stays in the China market for customers in China. In Taiwan, a decent portion of our Taiwan production, so a third of the total revenue, actually ships into China. So our China exposure is relatively high. And then on the bottom right-hand corner, you see that, we break out revenue. Actually, we'll get into a little bit more detail momentarily, but we have various categories of high-end versus mainstream, and it's about a 50-50 split, high-end being more leading edge on both the semiconductor side and the flat panel display side. One of the things that I want to highlight is, we have 11 clean room facilities throughout the world, 3 here in the United States, 6 in Asia, which includes 2 in China, 1 in Korea, and 3 in Taiwan. Having facilities strategically close to your customers is a huge advantage in this industry. Our lead times tend to be about 1 to 3 weeks, and then we win business and sometimes we lose business because we can quote turnaround times of about 24 hours. And so having facilities very close to customer locations, obviously you're gonna reduce your shipping time, and so that's a huge strategic advantage for us. So what is a photomask? And as I was kind of saying, with that earlier slide, so we break out revenue, semiconductor, on the semiconductor side and the flat panel display side. Semiconductors is 3/4 of the business. And there, what happens is we take a piece of glass and when we receive the semiconductor chip design instructions from our customers are a lot of times manufacturing facilities. So Samsung, Semiconductor Manufacturing Incorporated, which is based in China, United Microelectronics, they're based in Taiwan, Intel, Taiwan Semiconductor, Global Foundries, Texas Instruments, any semiconductor company with a manufacturing operations, they will send a semiconductor chip design to us. Our engineers will convert those instructions into a software program that we insert into our clean room facilities. At the clean room facilities, we essentially shine and write onto the piece of glass what those instructions are. So when a semiconductor chip is being designed, there's multiple layers to complete that entire design. Every layer of a semiconductor chip requires 1 photomask. So one chip design will wind up with, say, 20 masks, 30 masks, 80 masks, 100 masks, depending on the complexity of the semiconductor chip. So every layer requires 1 photomask. So what happens is we create we essentially print and etch onto the glass the chip design, create the photomask, set, ship those out within 24 to 48 hours off to the manufacturing facility. In the front end of a semiconductor production line, our mask is inserted into a lithography tool. If you've heard of a company called ASML, they're the market leader on lithography in semiconductor production world. So our mask is inserted into the lithography tool. A laser light beam shines through the glass and essentially projects the semiconductor design onto the wafer. And it actually shrinks it down into a very miniature size. Then the wafer gets cleaned and polished, and it comes back, and you insert the next layer or the next photomask, and essentially print the next layer of chip design onto the wafer. So you go through that entire process, ultimately creating the semiconductor chip or the integrated circuit. The wafer gets diced up, and now you've got a semiconductor. Very similar thing happens on the flat panel display side, where we receive the schematics of the design of a laptop, the screen of a smartphone, tablet, even a TV. And for a TV that's, say, 70 inches, a 70-inch screen TV, yeah, you need a photomask that's 70 inches big, right? Or at least 70 inches big. So the photomasks on the display side can be very big. And here again, it's the light shines through the mask and onto the piece of glass that ultimately becomes your display for your electronics device. So again, it's 3/4 of our business is on the semiconductor side, and about 1/4 is in flat panel display. And then within, I had mentioned earlier, we break up revenue between high-end and mainstream. In the semiconductor world, our high-end business is considered, for those familiar with the semiconductor world, is considered 28 nanometers, 22 nanometers, 14 nanometers, and we do a little bit of production at 7 nanometers. So those are all dimensions of semiconductor chip design, and it's a measurement of the distance between transistors within the semiconductor chip. And so today we hear a lot about NVIDIA GPUs, right? All the rage on artificial intelligence. NVIDIA GPUs are a lot of times being designed at, say, 3 nanometers, 4 nanometers, 5 nanometers. Well, if our high-end revenue goes down to, say, 14 nanometers or maybe 7 nanometers, how does that relate to an NVIDIA GPU? Well, the history of the industry is, as the semiconductor industry was being developed 50, 60 years ago, most of the photomasks for the industry were in-house at the manufacturing operations. And then along comes merchant suppliers such as Photronics in order to capture some of that business. Eventually, merchants became big enough where about 50% of the market, of the total photomask market, it was about 50% of the market became merchant supply in 2010. Since that time, it's kind of evolved to where it's actually skewed back towards the captives, where captives now are at about 63% of the total merchant supply of the market. And I'll get into a little bit why that is shortly. So why invest in Photronics? So as I said, we're a market leader of photomasks into the semiconductor industry today. It's a very critical product for the manufacturer of chips. The market size is about $6 billion today. Of that, as I said, it's about 63% of that market is captive. The remainder is merchant. Of the merchant market on the semiconductor, this is on the semiconductor side, we are about a third of the market share of the merchant market. And there's another player that's a little bit bigger than us. And so combined, we're about 70% of the global market. So it's for all intents and purposes, it's pretty close to a duopoly. In the United States, the market share is even more concentrated between the two of us. We actually have a little bit more favorable market share. Combined, we exceed about 90% of the U.S. market, which becomes very interesting when we think about the reshoring of semiconductor production into the United States. We hear a lot about, with the current administration in the White House, about bringing manufacturing back into the United States. It is very, very true and very much happening in the semiconductor world. In December this past year, we announced that we were going to expand our production capabilities here in the United States. Again, we have 3 clean room facilities here in the United States. One of them in Allen, Texas, which is a suburb of Dallas. We're expanding capabilities into what we consider 40 nanometer and 65 nanometer. And you think about, okay, well, then that's not your high-end business. Well, true, but some of that business that we are manufacturing out of our high-end facility up in Boise, Idaho, we are transitioning to our facility in Allen, Texas. The reason that's important is because then that frees up our high-end capabilities and capacity in Boise, Idaho to take advantage of what's happening here in the United States. And what is happening? Well, Taiwan Semiconductor, which is the largest manufacturer of semiconductor chips in the world, is expanding very aggressively in Arizona. They expect, or at least they've come out and said that by 2030, they estimate they're going to have about 1/3 of their global high-end production occurring in the United States, from like a couple percentage points today. So a very aggressive shift by Taiwan Semiconductor to bring manufacturing into the United States in the semiconductor world. Global Foundries is going to spend $15 billion over the next 5 years to expand manufacturing in the United States. Texas Instruments is expanding very aggressively in North Texas to expand their manufacturing capabilities. So we're seeing this massive semiconductor reshoring of production into the United States, which is very exciting for us being a market leader and a big supplier into the United States. As part of that, we do talk about captives outsourcing more. And so I talked about earlier, okay, the semiconductor industry was about a 50-50, or at least the photomask portion of the market was about a 50-50 split between captives and merchants in 2010. And it's kind of progressed to about 63% on the captive side. We do think that the merchants, because of this reshoring of production into the United States, we do think the merchants are going to capture a little bit more business in the future. And that's because as Taiwan Semiconductor is expanding here in the United States, well, they don't have a mask operation, photomask operation in the United States. They do all of their photomask production out of their facilities in Taiwan. And so because time is of the essence and shipping costs and whatnot, does it make strategic sense for them to create, to capture, to bring photomasks from Taiwan into the United States for semiconductor production here in the United States? We don't think that that's the smartest move in the world. Obviously, we're a little bit biased, but we don't think that that's the smartest move in the world. And so we are prepared and we are in conversations with them in order to handle more of their production here in the United States. Nothing, confirmed yet, but we're hopeful that that something like that, that they'll be outsourcing a little bit more. We're also in conversations with companies like Intel and Samsung, which are existing customers today, to expand more aggressively into or to take on more of their business. We also talk about node migration as being beneficial for our industry and for us in particular. As I said earlier, sometimes a semiconductor chip design will require 20 masks to produce a semiconductor chip design. Sometimes it takes 80 or 90 or 100 masks. And as you go into smaller and smaller geometries, more of a higher end business requires more masks. More masks equate to a greater revenue profile for us. So that's a favorable trend that we see happening. And then on the display side, we see more higher end masks being required for more advanced screens and more advanced capabilities. Some of the things that we're seeing on the screens, for smartphones today and for tablets today is, lighter screens, because we're hearing a lot about foldable phones today, right? Well, a foldable phone, you basically have a screen on one side of your device, and then you open it up and you have essentially two additional screens. So the lighter the glass is, the lighter the phone's going to be, right? Because I think, it appears to me that the initial phones on the foldables are quite heavy, right? And that nobody wants a heavy phone, right? So so that's an important technology advancement that's coming down the pipeline. Also, things that they're working on, or that we're going to help with our photomasks to help that the industry is working on is, I don't know about you, but my eyesight has really deteriorated over the last several years, staring at my smartphone and tablets and whatnot. And so they're actually working on screens that are actually going to reduce the strain for eyesight, which I think it will be beneficial for everybody, right? And then, so those are some of the advancements, and why invest, from a technology capabilities perspective. Operationally, we're very good at what we do. We're very, we have very streamlined organization. We don't spend a lot on OpEx. It tends to be about 10 or 11% of total revenue. And we generate a lot of cash flow, which is always a good thing. And so really, it's all about new chip designs as far as what's going to drive revenue growth in the future. And obviously, semiconductors, the end market is anything that requires a semiconductor, whether it's consumer electronics, automotive market, industrial, aerospace, defense, runs the gamut. And it's not as much about wafer starts or wafer fab equipment spending. It's all about semiconductor chip designs, which makes it harder to track for the investment community. just to see, what's coming down the pipeline for new chip designs, but you can rest assured that we pretty much, our revenue trajectory tracks it pretty closely. And we talked a little bit about the reshoring of semiconductor production. I don't need to go into much more detail about that. But this slide talking about node migration, which I mentioned earlier, really gives you a feel for the value of a photomask as you get into more leading edge. And so I mentioned earlier, okay, we don't produce a lot of masks today at 3 nanometers, or we don't produce any masks at 3 nanometers, 4 nanometers, 5 nanometers. The bulk of the masks that we produce today, are in the 22, 28 nanometer, 40, 65 nanometer, and 90 nanometer range. But as you get into these more advanced photomasks and the more advanced chip designs, the value of the mask increases exponentially. The reason for that is to produce an NVIDIA GPU today requires a technology called extreme ultraviolet technology. ASML produces or manufactures the lithography tools for that capability. One lithography tool from ASML costs $300 million. So a fab at TSMC, Samsung, Intel, obviously it's going to be hugely expensive to create chips at those geometries. And because of that, there's a fairly high correlation on the costs of producing a mask at those geometries. So in a let's say a 5 nanometer chip design, let's say requires 80 layers or 80 photomasks, and you actually in that photomask set likely it's about a third of those masks will require EUV capabilities. The remaining 2/3 actually don't require EUV capabilities. So what may be happening is, we could go to TSMC and say, hey, we will produce some of those non-EUV masks at say 28 nanometers for you, which would probably be about 60 masks in a total, 80 mask design set. And then TSMC will say, okay, we'll handle the EUV masks, the remaining EUV masks. And so, that could open up opportunity for us at say 28 nanometers to handle some of those capabilities. Or, conceivably down the road, and we are expanding our capabilities into more higher end, we could, ultimately capture that, 7 nanometer, 5 nanometer production, but that's going to take some time. Another example of the difference in mask value. So Photronics is the #1 supplier. I know I talked about the market shares earlier, but we are the #1 supplier, and those were from a revenue perspective, but we're the #1 supplier from a units volume perspective globally, and that includes the captives. And so on the semiconductor side, we generate about $600 million in annual revenue. If I was to take Taiwan Semiconductor's photomask operations, their internal captive operations, and isolate that business and separate it out from Taiwan Semiconductor, that's probably worth about $3 billion in annual revenue. So 4.5 times larger than we are. And that's because they produce, it would probably be about 75 to 80% of their masks are at 3, 4, 5, 7 nanometers today. So that gives you a sense for the cost required and obviously the value of masks at the very leading edge. Obviously, we want to get there, but we're in a capital-intensive business. It doesn't, we don't install an EUV tool from ASML that costs $300 million. We go out of business pretty quickly. The tools the equipment that we install into our clean room facilities range anywhere from say, $10 or $15 million up to say $40 or $45 million. Not nearly as expensive, but for us, it's still quite capital intensive, which is a double-edged sword, right? It's great because it limits new entrants coming into the industry, on the flip side, it's capital intensive. And so, you know, while we generate a lot of cash flow, we spend a lot on CapEx. And I talked a little bit about the display business, you know, with the foldable phones and whatnot. One of the things that I'll say on display is Photronics is very good at creating photomasks for the display market. Several quarters ago, we started shipping our more advanced or next generation photomasks for what's called AMOLED Generation 8.6. The customer that we were shipping to has its own internal mask operations, and they decided to go with us because we could do things with we had better capabilities on creating masks than their own internal operations, and that's it's pretty impressive because considering that that customer is a very well-known semiconductor and consumer electronics company based in Korea, if you understand who I'm talking about. So, you know, again, why do we win? It's high quality, operational excellence, being able to ship, you know, your photomask set out at a very rapid response time. We call it cycle time, within 24 hours. Those are really the reasons why you win. And you know, we have a global footprint with 11 clean room facilities throughout the world, and we're expanding our capabilities on the technology side. Over the last several years, we've grown pretty well. In 2019, about 3% of our revenue originated out of China. Then again, you know, you go to that chart on the page 3 or slide 3, one of the first pages that I showed. We're at about 25% of total revenue coming out of China today. So have grown very significantly with our China operations. And then, you know, when COVID hit, the supply chains were very disrupted. We, you know, again, I think I quoted earlier that we have 1 to 3 week lead times. During COVID, our lead times exploded up to 4 to 5 months. It was during that time that the customers, the semiconductor manufacturing facilities, realized the critical nature of photomasks, because if they didn't have photomasks, they couldn't produce a single semiconductor chip. And so our pricing power really improved during that time frame. So that really helped not only our revenue trajectory, our gross margins improved from the low 20s into the mid 30s, and obviously helped generate, you know, pretty significant cash flow. As I said, you know, capital intensive industry, we're going to spend about, you know, close to 25% of revenue on CapEx this year, fiscal 2025, October fiscal year end. We've said for next year, we're actually going to undertake it's going to be another investment year. So while the last 5 years, 2020 through 2024, we averaged about 15% of total revenue was spent on CapEx. For 2026, we didn't come out and exactly say what our number is going to be, but we did say that, okay, we started a process of expanding our facility in Allen, Texas, that began earlier this year. And so because of that, our investment in CapEx is elevated in 2025. That's going to continue into 2026. On top of that, we're going through an end-of-life tool replacement cycle. So basically, over the course of our history, we've been very, very good. We've actually excelled at extending the life of equipment far beyond what our competitors have been able to do. Competitors have told us that, you know, actually they're trying to figure out what our secret sauce is and why we've been able to do it, which is great because you don't have to buy equipment as frequently. But now we've kind of come up to this time frame where all of a sudden we have a lot of end-of-life tools that we have to go through and replace. And so we're going through this cycle that's going to last about 3 years of elevated end-of-life tool replacement costs. So part of that occurred in 25. It's going to continue into 2026. And then on top of it, we are expanding into our capabilities in one of our facilities in Asia. And so what's happening is, you know, I mentioned 25% of our revenue originates out of China today, right? And I talked about the reshoring of semiconductor production in the United States, but also, the whole industry, because of COVID, is trying to diversify itself away from or move production out of China. It was way too exposed to China. There's another factor that is at play. The Chinese national government is trying to essentially create its own self-sustaining semiconductor industry. And as part of that, a number of years ago, actually around the time that we entered into China, the Chinese national government started subsidizing startups in China. And so we see that today, we actually see those players largely participating at the 90, 130 nanometer geometries. And so we do see pricing pressure at that part of the market. It's not a big percentage of our China business today. The bulk of our China business occurs at 22, 28, 40 nanometers today. But we'd be foolish to think that at some point down the road, we don't know, maybe 3 years, 5 years down the road, those Chinese startups probably start to encroach onto our entrenched position here at 22, 28, 40 nanometers. And so what we're doing is, obviously, we're expanding here in the United States. We're also expanding our capabilities at one of our facilities, not in China, to expand capabilities to support some of our customers, particularly in the Korea region. And so what you're going to see, or what we're trying to see, demonstrate over the coming years is, yes, while we do see this risk, we're going to continue to generate revenue out of China. We're going to continue to generate cash flow out of China, but we're not sitting still, and we're going to try to evolve our geographic profile and our revenue mix to diversify away from China. If you took the China market, and I said, about 25% of our business is generated out of China today, but we do have 2 facilities there. One's on the semiconductor side, one's on the flat panel display side. And if you took, if you're to dissect into, what the breakdown is, it's pretty close to a 50-50 split. We do not see the startups on the flat panel display side in the China market. It's only on the semiconductor side. And so that gives you a sense of, how much exposure we have to the China semiconductor market, where we do see the increasing competition. And so that's why, it was kind of a lengthy description of, conversation about, what we're doing and why we're doing and why we're expanding geographically into the markets that we are. So real quickly, I think we have, maybe about 10 minutes left. Do I have that right?
Yeah.
So real quickly, just kind of summarize the current environment that we're in. It's been a little bit of a stagnant environment. Again, we grew pretty significantly, coming out of COVID for the last several years. China was a pretty good contributor to the revenue growth. And then over the last, I would say, 12 to maybe 18 months, revenue slowed down and has continued to slow down for a couple of reasons. One is, again, we're not really participating in the, in the AI data center semiconductor world today, right? And that's where all the growth in semiconductor world is coming, right? NVIDIA is knocking, everything out of the park. Broadcom, Coherent, you name it. The rest of the semiconductor world landscape, Texas Instruments, Infineon, ON Semiconductor, ST Micro, Microchip, a little bit more sluggish, right? And that's very reflective of our business over the last, say, 12 months. On top of that, there's been the tariff issue and the whole geopolitical landscape that has also kind of stagnated our business a little bit. If you think about a semiconductor chip company, XYZ, and they have a choice of manufacturing a chip in the United States with, say, Global Foundries, or off in China, depending on where they're going to ship their product to. If they're not certain what the tariff landscape is going to look like, because tariffs still haven't been finalized, at least with China that I'm aware of, since they don't know what the tariff costs are going to be, they're not entirely certain they know exactly where to manufacture the product. And so we've seen a little bit of the slowdown in the release of new semiconductor chip designs because of that. So that's kind of impacted our business a little bit. Yet we still generate gross margins in the low 30s, which is much better than we have in the past. And so we've seen, there's been a concern with our business. Okay, how sustainable is this gross margin improvement that you've seen over the last, say, 5 years? It's been about 3 years the last 3 years where we've been able to generate gross margins in the low to mid 30s. And so that's been, pretty consistent. And then on top of it, ever since, or I would say in the last, starting about 5 or 6 years ago, we entered into long-term sales agreements with customers. And within those long-term sales agreements, anywhere from 1 year to 3 years, and have continuously rolled over and been renewed. We've had pricing agreements established in those sales agreements, and we've not had very significant changes in the pricing environment on those long-term sales agreements. So that's pretty important to understand for the gross margin profile. This goes into the product mix, which we kind of talked about earlier, and then I'll talk a little bit about the balance sheet, because everybody always wants to understand what's going on with our cash balance. $576 million of total cash and short-term investments, which you need to be aware that 69% of that balance is associated with 2 joint ventures that we have. Getting back to that geographic presence, one of our joint ventures is in Xiamen, China, so on the China semiconductor side. Another joint venture is in Taiwan, also on the semiconductor side. So those 2 joint ventures, both with the joint ventures with a competitor called Dynapon Printing. Dynapon Printing is not allowed to compete in both the China market or the Taiwan market. We have full operational control. It's a 50.01% ownership for Photronics. So full operational control, full decision-making control, full financial control, consolidate all the financials into all of their financials into our financials. So that's important to understand. And obviously they've been generating, those 2 facilities have generated a heck of a lot of cash flow over the last several years. And so that's why, a good portion of the cash balance is tied into those joint ventures. Over the last 3 quarters, we've repurchased $97 million worth of stock. Did so very opportunistically. It was about $73 million occurred in the April quarter. Took advantage of the financial market volatility that had occurred. The board has authorized an additional $25 million on top of the $3 million that was remaining. So there's $28 million now on the repurchase authorization. I'd say that from here, given the capital intensity that we're expecting over the next couple of years, for us to repurchase any more stock, it's going to have to be probably be very opportunistic from here. Yeah, and then the last slide is basically the guidance for our October quarter, but I think I'll leave it up to see if there's any questions, because we have a couple minutes remaining. Yeah.
Oh yes, I seen maybe you had about 20 million plus in debt, and then about 600 something million in revenue on the other screen. Is that at 20 million in debt?
So that was a year ago. We had 20 million of debt in the year ago quarter, July quarter. So in the July quarter this past year, we're basically down to almost zero debt, almost debt free.
What about Intel? What did you make of that, and how do people feel about the government, bailing them out?
Well, it is, a weird situation for us Americans, right, where the government's taking ownership of a private enterprise. Although we did see it 15 years ago, 15 or almost 20 years ago in the financial services industry as well, right? But so it's not unprecedented. But obviously, free markets, you don't really want the government to take it over. At the same time, Intel for a good 10 years has really dropped the ball and fallen behind TSMC. And so, the question is, does the investment help solidify Intel's positioning? It sounds as though the government doesn't want Intel to divest its fabs. It sounds like that's the primary purpose of it, because Intel or the government does run programs through Intel's fabs, and they want to make sure that it's doesn't fall in the wrong hands. And so that sounds like that's the justification for it. Well, the way we look at it is, hey, Intel's a customer of ours. If it helps them get healthier, that's a good thing. Yeah.
So Ken, if you take out the AI,
Yeah.
and I don't know what else, maybe some select telecom. What's the base growth rate X that?
Yeah. I mean, I guess I could hide behind it depends on the semiconductor chip design starts, but nobody knows what that, or at least most people don't know what that is. I guess what I'd say is there's market research out there that indicates. So I've been saying, we've been in kind of this sluggish environment for the last year or so. Market research is projecting that at least for the markets that we're serving, the non-AI data, hyperscale data center environment, it's probably going to be several more quarters of sluggishness, and probably looks towards the second half of 2026 before things start to pick up. That coincides pretty well with artificial intelligence transitioning towards end user devices, whether it's the smartphone or a tablet or robots or the automotive market. So as chips are being designed for AI at the edge, that would be a good catalyst for us, which we think probably coincides pretty well with the timing of that report. We'll see how it plays out, but that's kind of how it feels like at the moment.
Do you produce human chips?
I'm sorry?
Do you produce human chips?
Human chips?
Yeah.
What's a human chip?
Biohacking.
Well, again, we don't produce chips. We produce photomasks that enable the manufacture of any semiconductor chip, except for the very leading edge. That's at 3 nanometers, 4 nanometers, 5 nanometers. So any other chip, at 14 nanometers and beyond, and older, yes, if it's a semiconductor chip, we probably produce a photomask for it.
Yeah.
I'll let you go first. How about 2 more? We'll go fast.
Does China have any issues with you doing business in Taiwan and vice versa?
No, because a decent amount of our Taiwan business ships into China, so that's good. There was this past summer, one of our customers, Semiconductor Manufacturing Incorporated, was added to not a banned list, but almost a banned list, where Taiwan placed them on it was a restricted list. Taiwan placed Semiconductor Manufacturing Incorporated on a restricted list. SMIC is a Chinese-based company. And so that actually caused us to move some manufacturing around because previously we were shipping out of our Taiwan facility into SMIC. Well, now we had to move all that production over to our Chinese facility to ship into SMIC. So it caused some challenges for sure. You worked around them, and that's the advantage of having global operations with facilities in various countries, right? Where you can offset and kind of diversify or move away from any restrictions.
And One more question.
Yeah, I was gonna ask, how much cash flow currently, I mean, how much cash on hand may your company currently have? Like, in general, like some companies will mention they have like thousands of millions of dollars.
Yeah, I mean, if you look at, I think, our operating margins are about 25%, and then take out the cash flow or the CapEx. So you're talking 10 to 15% of revenue is free cash flow. So on a $800-something million business, you're talking about $100 million of annual free cash flow.
So you can pay off that debt easily, it's just there because of the books or something. Well, you already paid off the 20 million a season.
Yeah.
100 million.
Yeah.
Well, thank you, Ted, and the presentation for your
Thank you very much.
I think we got to run right into the next one here.
Yeah, sorry
That
for
was,
taking
a long
a little longer.
Q&A. But now